I am Delta, an economist with 20 years of investment experience, and I will be your guide through the labyrinth of ledgers, enigma of economies, and volatile earnings reports. Here at Delta Code, I break down jargon, analyze trends, and share actionable insights to help you make financial decisions. We're not just watching the markets. We are cracking the investment code and unlocking its secrets. Delta is a Greek letter and a mathematical symbol for change. And here, a Delta code where curiosity meets clarity, change is the only constant. Today, I want to do a preview of earnings because this week of stock earnings is one of the biggest weeks for our portfolio. Recently, Meta reported earnings, and that was huge for our portfolio as it is our second biggest position. But this week, most of our other top position companies are reporting their earnings. So let's dive in and check out what to expect for each of these and which ones I'm excited about because they are big positions in my portfolio. So the companies we will cover this week and we will look at their earnings closely are Monday.com that reported today after the close. There are no companies we're particularly excited about. We may look into Waste Management and Zoom Info, but rest of these we're either not familiar with or have no interest of investing in. Tomorrow is a huge week for us, a huge day for us in earnings. Shopify, Datadog report before the market opens. These are two of our companies in our portfolio. Shopify is one of the biggest positions. Following that, later in the day, we get Upstart. This is one of our short squeeze options. If you haven't checked out that video, check it out, where I list 3 companies that are poised for a short squeeze, where short sellers will be forced to buy this stock at a higher price should their earnings surprise to the upside and should the interest rates go down, because this is one of the 3 companies I have highlighted as interest rate sensitive, which means they will do better when interest rates go down. And in particular, these 3 companies have very high short interest, which means investors are betting that these companies will do badly in the future, and they have borrowed shares and sold them in expectations of repurchasing them at a lower price in the future. If they are wrong, they will be forced to buy a lot of shares at a much higher price. Robinhood is one we have our eye on, but we are very hesitant to invest in, despite possibly bright future for Robinhood given the crypto market's turnaround and what it will mean for the bottom line of tomorrow. There is Akamai, Zillow, and Instacart. Most important of these that we want to pay attention to is Zillow. This will give us a sense of the real estate market and also be a barometer for Redfin, its competitor in their duopoly that reports next week and is also one of the high short interest companies. Akamai will be a good predictor of how Fastly will do on Wednesday because they are competitors. Given what happens here, you can expect Fastly to react similarly as if they reported. On Wednesday, we have Twilio, HubSpot, Fastly, and Upwork as companies we will be paying attention to. We own Twilio, Fastly, HubSpot, and Upwork. Also, Twilio is one of our biggest positions. And then Thursday, the biggest, most important companies for our portfolio are Coinbase and Trade Desk. Coinbase is our biggest position, makes up about 75% of our stock portfolio, and we have made many videos of our forecast for this earnings report and the future earnings report for Q1 of 2024. On Thursday, we will know how good our forecast was, and it will also give us insights and guidance for the next quarter so we can update our forecast and know what to expect in 3 months from then. Trade Desk is also one of our biggest positions. Friday, We have nothing we care about. We will probably just do a recap of the week on Friday, but look out for Thursday because, boy, Coinbase should be a doozy. After reporting today, it looks like Monday.com went down 10%, but fret not. Just zoom out and you will see that since November, the price was about 120. The stock is almost doubled in the last few months. So a little pullback does not hurt. It's often healthy. I'm a big fan of their software. I've used it before. Project management tool. Now, the stock market overreacts to news often, and big price drops can present a good opportunity to buy a high quality stock. Is that the case here? The Q1 results were strong with solid revenue growth and improved margins and cash position. Overall, standout quarter compared to mixed results of other tech companies. And this should cause investors to raise their projections. Now, the stock is only up 20% since its 2021 IPO. So it hasn't gone up too much. Generally, stocks don't always perform well post-IPO, at least in the first 6 months. So Monday actually had earnings per share of 65 cents and revenue of 202.6 million, which beat the average analyst estimates that were calling for 32 cents and 197 million. A tough lesson I learned while investing is the reported earnings often don't mean as much as forward guidance. So even the fact that they had big sales and earnings beat, investors are fixated on the forward guidance, as they should. When you invest in stocks and companies, you are looking to buy the future performance, not the past. Past is already been accounted for and priced in to the current price, and then investors are slightly adjusting based on the facts, whether their previous investments are in line with what they expected, and then pulling forward what to expect in the next quarter or two. So the guidance were less exciting, therefore investors sold off. Now, companies don't always have perfect guidance. Sometimes they may be conservative in the guidance and then often beat. Now, if we look at the actuals versus estimates, we can see that for the past 4 quarters, that actuals have beat the estimates, including this time that they just reported today. The guidance and expectations are usually lowballing the actuals, which maybe Monday is also going to reevaluate after investors have a moment to digest this fact. Now, quickly scanning the financials, we would like to see double digits, hopefully 20% profit margin and operating margin. Return on equity obviously is a result of them owning their own stock. This should be better going forward. Revenue is pretty decent, 677 million, and revenue per share of $14. Net income is a loss, and hopefully they will turn this around. Very large percentage held by insiders, 21%. This isn't always a bulletproof metric to know whether a company is doing well or not, but it gives me confidence because I do believe that incentives are a programming language for humans, and incentives are code for humans. So these humans that are at this company have been programmed with incentives to make this company profitable because their interests are aligned with ours. Short float is very low, not to be concerned. Total cash, billion. That's good. Total debt, very low. Very healthy balance sheet. Beautiful balance sheet. No concerns there. So onward to the next quarter for Monday.com. I would not be opposed to starting a very small position now, and hopefully the stock pulls back further over the coming weeks. But it looks like they're on a path to being profitable, and given their balance sheet and me being familiar with their product, I feel good about this one. Now, for a quick recap of our top 3 companies poised for a short squeeze, they are Redfin, Carvana, and Upstart. Redfin, ticker symbol RDFN, Carvana, CVNA, and Upstart, UPST. Redfin has a short interest of 28, Carvana 43%, and Upstart 41%. All of these companies are reporting earnings either this week or next week, so this should be exciting for this short squeeze portfolio that we have here. Now, today we increased our position in all 3 of these companies in expectations of the earnings, and hopefully the interest rates will come down sometime this year, which will be huge for these companies. We did not want to recommend this as a short squeeze opportunity without having skin in the game. And if I don't have the company in my portfolio, I have a hard time paying attention to it. So this is my way of putting skin in the game. For the short squeeze to work, those 3 companies need to become much better at being profitable, stop losing money, and they're highly dependent on interest rates. Now, interest rates will not come down until CPI comes down. As you can see, it is falling year over year. From the Bureau of Labor Statistics, it's now at 2.4. Consumer price index is going up, which we're not happy about because that means interest rates will be up higher for longer, and PPI is also going up. Until few of these metrics stabilize, we do not see the FOMC lowering interest rates. It will probably be the second half of this year when we see substantial rate cuts that will impact those 3 companies in a positive way and result in a short squeeze. And lastly, let us look at the crypto markets. Seeing lots of double-digit greens over the last 7 days. Bitcoin is almost back to 50,000. Ethereum is past 2,600, looking to breach a local maximum that it recently reached. Solana is back to 110, and most of the top 100 are up in either high single digits or double digits. Most importantly, Bitcoin is up 17%. 50,000 is a rounded number and a psychological number, which we are looking to break. Entire crypto market cap is up to 1.86 trillion. This is huge because previous earnings of Coinbase were at around the time when crypto market was 1 trillion. So entire crypto is up almost double from the last reported quarter. So Q1 of 2024 should be guided positively for Coinbase on Thursday. To reference our Marshmallow Arbitrage video, where we showed how you can make 4 to 7% arbitraging Ethereum, the Stone ETH Ethereum arbitrage right now is 4.9%, which is about free 5% on your Ethereum if you can wait until March 26 to take opportunity of this arbitrage. The way you do it is you trade your Ethereum for Stone ETH now, and then on March 26, you trade back your Stone ETH for Ethereum 1-to-1, where you realize this 5% gain. Probably better than 5% because Stone ETH at that time should be worth more than Ethereum. Let's check in on our best trade right now in crypto and traditional markets, which is Grayscale Ethereum Trust that has a 12% discount to net asset value. This is an investment that we think is free 12%. Should you want to purchase Ethereum now, you could buy it through this instrument, which is the Grayscale Ethereum Trust, ticker symbol ETH. And once Ethereum has its own spot ETF, like Bitcoin just got on December 10th, this discount will go to 0 and you will realize free 12% or whatever discount you happen to purchase this at. The discount has fluctuated. It's been as big as 50%, Recently, it dropped to as little as, I think, 7, following the expectations of the Bitcoin ETF. And now it's been fluctuating between 12 and 10%. There's also 15 at one point. So we think this is one of the best trades you can make. If the spot ETF gets approved, this 12% will become 0 and you will gain this free 12%. The probability of that happening is not as certain as it was with Bitcoin, but using the same logic in Quartz, because Ethereum futures ETF has been approved, similar instruments to this Ethereum Grayscale trust. The Quartz Grayscale used the logical argument that there is no reason to deny a spot ETF because it actually tracks the price better than these other instruments that he approved but have a discount like this that are actually hurting investors. So by approving a spot ETF, it's actually tracking the price better, and it will help protect investors from unnecessary losses like the discount to net asset value that they're experiencing with the Grayscale Ethereum Trust. Remember to subscribe, hit that notification bell, and join the Delta Code crew, where curiosity meets clarity and change is the only constant, like our name. As always, may the force of compound interest be with you. Until next time, peace.